It's gonna be lit.
Con.
You got time to hang out with me for a while?
Yeah, man. Listen, let's do it, man. Yeah, we're here to do it. Let's do it, man. I'm awake. Is what it is.
Let's go, champ. Cool. Cause this is gonna be a lot of education on this one for those who want to know. Hit the chats with these links. So brothers want to join in, they can. Shalom, shalom. Oops. All right. There we go. All right, man. All right. All right, man. Hey, shalom, shalom. Akim. First and foremost, I want to say call hello, Yahweh, Bahashim, Yahweh Shai, Bahashim, Rakah, Wadash. I want to send double honor to the apostles and the elders of Great Millstone. I want to send much peace, love, and salutations to you, Akim, out there pushing the word sincerity and truth. It's the brother Ariala. And then I got the brother Require Kwon with me. Once again, thankful for that brother, man. Stand up late to do this GMS algorithm, World War III algorithm. Y'all brothers, please let me know if I'm starting to get choppy. I'm out here in the middle of the damn country. So what I did was I switched from Wi-Fi to my what's it called, hotspot. So because I know in the last few streams it kind of got choppy. So if it's getting choppy, let me know because Lord willing, today we're gonna methodically kind of go through a breakdown of what's been going on with the what I call the bank controlled demolition. You know, they say a collapse or a contagion, but it's more like a controlled demolition because when you look at the information and you understand the prophecies, you know that a lot of this stuff they already knew what they were doing with it, and it's very intentional to control the markets. Okay, so we'll be talking about a lot of the stuff that's going on with these banks, why there's such a frenzy going on, but also how it applies to biblical prophecy. Okay, and basically the gradualism to the M.O.T.B systems, the market of beast systems, and how that comes into play. Okay, because it's all linked up and it all makes sense, and it's all a part of the Most High's plan ultimately. Okay, and so first of all, what we want to do is just break down some basic things to where if you're hearing it on the news, so you can have a more clear understanding of things. And then what we'll do is go into okay the events that went down and what they and some of the things that they have been planning, some of the things that we have been talking about here on the World War III algorithms. Now, our previous algorithms, we talked about smart cities or what now they call them 15-minute cities. We've been talking about the Internet of Things. We've been talking about blockchain and and the implication with the what is digital network, 5G, everything, quantum computing. We've been talking about CBDCs and how that links up. So so all of these things are part of some of the things that they want to do. Okay. Do you have any opening statements required, Quan?
No, I just had one scripture. This is Matthew 10 and 16. It says, "Behold, I send you forth as sheep in the midst of wolves. Be ye therefore wise as serpents and harmless as doves." And I wanted to key in on where it says wise as serpents. You know, we're supposed to be wise and knowledgeable in all things. You know, we're not supposed to be dummies, if so to speak. You know, in this society, Esau does a good job of dumbing down the Israelite man, you know, and keeping his knowledge base, you know, in a box where Jake, you know, he even know about basketball, he know about entertainment and sports, and then maybe a little bit about what he's actually doing. But in terms of the wider mechanisms of the world around him, most Jake are pretty ignorant, you know, because things like learning about the economy is quite tedious. It takes a lot of focus, you know, to be able to judge what's going on. But we being as Israelites, The word Israel being he's a prince of power. Princes are supposed to be wise. They're supposed to have a great general knowledge, especially of the mechanisms of a kingdom. So this is, one of the things the Lord is teaching us, that you might have been in the world, you ignored these things. But when you come into this truth, you can't afford to be ignorant, man. So it's a beautiful thing.
Absolutely, man. And that's one of the things that we're going to touch on today, because when we're looking at these big banks that are holding billions and billions of dollars, when we hear about a bank run, we ain't talking about Joe Blow asking to get his $2,500 out the bank. That ain't what they talking about. People, you see those old pictures of the Great Depression, everybody wrapped around the corner. That's not what they're talking about when it talks about a bank run. Yeah, man, I went to Bank of America. It was a whole bunch of people out there. That ain't what they're talking about. Your 8,000, your 1,500 is not what's making the bank fall. Okay, all the money is literally encapsulated within about 1%, less than 1% of the people on the planet Earth. You can add up. You can take everybody, 95% of the people on the planet Earth, take all their money, and it wouldn't even come close to what this top 0.5% to 1% of people have that's controlling how your world works. That's who's running on the banks, and they're doing it by a click of a button. They ain't going up to no bank. They just click. I need to wire 80 million out of this bank and move it over here. And when you get a whole bunch of people doing it at one time, it's like, oh shit. For some of these banks, well, really for any of these institutional entities, it would go down like that. Okay. All right. And so that's what you call a liquidity issue. You're not liquid enough. So we're gonna learn about and talk about all of that and put it all together, man. I want to open it up as well with this scripture, Micah 2:1. It says, "Woe to them that devise iniquity and work evil upon their beds. When the morning is light, they practice it, because it is in the power of their hand, and they covet fields. They covet fields, land, property, and take them by violence, and houses, and take them away." Okay. So they oppress a man and his house, even a man and his heritage. And so when it comes to these businesses, these banks, different, they devise and they practice how to take it. Okay. And we're seeing right now a grand scheme to lead into a particular system. A new world order is what they want to bring about. And they want to have it digitized and ready to go. All right. So now currently the banking systems work underneath something called a fractional reserve banking system. Now, brothers have been doing videos on that. We're not going to go into that. Pretty much what that means is that the deposits, when someone comes to a bank and they deposit, let's say they deposit $1 million, they only have to hold a fraction of that $1 million as reserves in the bank. The rest of the money they have, they can lend out, they can make certain investments with it and do whatever they want. And a lot of times they don't even have to have those reserves in there. And so a lot of these banks over the last 15 years, because interest rates has been so low, all right, they've been taking advantage of what's called low risk investments like bonds and other things like that. And they could just eat, because they could just recoup that interest year by year, and then their books look good. Okay. And for the most part, if you look at it, it made sense to do that. But what happened is the Fed, out of like just all of a sudden, rose interest rates real fast. Within like an 8-month period, they rose interest rates. They call it points. All right. And so when they say 400 points, that means 4%. So they might say, oh, we're going to go up by, 25 pips. That means 0.25%. So over the last 8 months, the Federal Reserve has made borrowing money harder by raising the amount of interest against that. Okay. And what it also does is it raises the rate at which the government will give out a bond. So, what is a bond? All right. I want to explain all these things so we can, when we move forward, everybody can be on the same page with me. Okay. What is a bond? A government bond basically is a debt certificate, a certificate of debt. You know, if somebody can get that thick clay on in Habakkuk the second chapter, this is one of the major ways he's got the ESAU. This B system has everybody in thick abatya because a lot of these people are holding U.S. dollar treasury bonds. When the government borrows from the Federal Reserve, which is a private bank, they borrow notes, dollars from the Federal Reserves. The U.S. government, the U.S. government will also just stay with me, bro. We're gonna get to quantitative easing and everything like that, but I want you to stay with me so you can understand. If you don't understand what I'm talking about with these bonds, you're not gonna understand how quantitative easing affected everything. All right, so just stay with me. We're gonna get to all of that. When the U.S. government borrows from the Fed, they create treasury bonds that people can purchase. All right, so people can purchase these treasury notes, these treasury bonds, and basically it's an IOU saying, okay, let's say that this bond is worth, I'm just going to use a number, $10,000, and we're going to say, hey, we're going to give you, 3% a year. Okay, we're going to give you 3% a year, but the bond will mature in 2 years. So you got that $10,000 at 3% a year. So you're getting $300 a year on that thing. Okay. They'll pay you. And after 2 years, they'll give you your $10,000 back, plus the interest that they said they was going to promise you. Okay. So you should receive basically 6% at the end of the 2 years. So it's considered to be very safe because it's the U.S. government. And so all around the world, different corporations, governments hold U.S. debt in treasury bonds, and they receive their interest year by year by helping basically shore up the United States government and their dollar holdings. So all of these different corporations, institutions, and countries are holding debt, thick clay, abatya that you read here. If you're paying attention to the comment board, Habakkuk 2 and 6. They're all and once everything's thrown off, what does it say? They're going to take up a parable against him. Habakkuk 2 and 6, shall not all these take up a parable against him and a taunting proverb against him and say, woe to him that increases that which is not his, how long? And him that ladeth himself with thick clay. So everybody is looking at all this debt. Or you going to pull up that one? Let me add that to the stream. I'm adding your picture that you just posted. Oh, you just took it down. Never mind. Uh-oh, we lost Required Quam. He'll be back. Let me go back. All right. And so basically, all of these different countries are holding this debt. All right. So now let's go to the interest rate that the brother out there from Hawaii have made a comment about quantitative easing. Quantitative easing basically made interest rates damn near zero. It made it easier to basically get debt or loans. It also, you with me, bro?
Yes, lucky. I was. Let me share my screen. I'll show you something while you're
Yeah,
talking.
I saw that. I was about to actually add it to the screen
Yeah,
because that was a good example of what I'm talking about.
I messed it up.
And you get to see the thick clay that all of these nations have been laden with. Okay.
Where is it? There we go.
Let me see. I'm gonna add it to the stream right now. Boom. Can you scroll in and make that bigger, bro? All right, cool. You want to talk about it?
No, no, just putting it there for brothers while you break it
Yeah.
down.
Now, say it says top foreign owners of U.S. national debt. These are all the people that are holding different levels of treasury notes, bonds, treasury bonds. These are considered. This is actually considered a safe way for you to get yield on your money that's sitting there. Okay. This is considered a safe way for you to just put some money in the bank, so to speak. You hold it in a treasury bond, and the United States is saying, "Hey, we're going to pay you interest on how much ever you hold." Okay. So now I want to go into a breakdown real quick of bonds versus interest rates. How does the Fed quantitative easing? How did that affect bonds, and what? And how does it? How does going up in interest rates affect these people who are holding all of this debt? Which is what happened with the Silicon Valley Bank and several other banks, and it's manipulation too. You're gonna find out why. All right. So we're gonna methodically work through this information. Y'all let me know if this is making sense to y'all. All right. Let's go here. Now, Khan Academy, I've always been a big proponent of Khan Academy. I actually used Khan Academy when I was going through school, but he does a very good job of explaining different things in economics, science, all types of stuff. On this one, he talks about the relationship between bond prices and interest rates. We're going to watch this, okay?
What I want to do in this video is
let me know if y'all can hear this.
Too mathy explanation.
Share your screen up.
Bond prices.
Okay.
Why bond prices move in the opposite direction as interest rates. So bond prices versus interest rates. So to start off, I'll just start with a fairly simple bond, one that does pay a coupon, and we'll just talk a little bit about what you'd be willing to pay for that bond if interest rates moved up or down. So let's start with a bond from some company. So let me just write this down. This could be company.
I'm gonna speed it up.
It doesn't just have to be from a company. It could be from a municipality, or it could be from the U.S. government. Let's say it's a bond for $1,000. Let's say it has a 2-year maturity. And let's say that it has a 10% coupon. 10% coupon paid semi-annually. This is
So what's this saying? He's saying that this is a government bond that you get. You're risking a $1,000. You're putting up $1,000 to get this bond, and every year is going to pay you 10%, and you'll get all your money back after 2 years. The money that you risked, that $1,000 that you risked. So you put up $1,000. They give you a certificate to say, "Hey, we're going to pay you twice a year, semi-annually, 10%. So in 6 months you get 5%, and in another 6 months you get 5% on this $1,000, right?"
Annual payments. So if we just draw the diagram for this, obviously I ran out of space on the actual bond certificate. Let's draw a diagram of the payments for this bond. So this is today. Do a different color. That's today. Let me draw a little timeline right here. This is 2 years in the future when the bond matures. So that is 24 months in the future. Halfway is 12 months. And this is 18 months. And this right here is 6 months. And we went over a little bit of this in the introduction to bond video, but it's a 10% coupon paid semi-annually. So it'll pay us 10% of the par value per year, but it's going to break it up into 2 6-month payments. So 10% of 1,000 is $100. So they're going to give us $50 every 6 months. They're going to give us half of our 10% coupon every 6 months. So we're going to get $50 here, $50 here. These are going to be our coupon payments. $50 there, and then finally, at 2 years, we'll get $50.
Yeah. So this is with a lot of what people who are wealthy, all the millionaire guys that I know, all have bonds. They love it because they live off those bonds. All right. So let's say you played basketball, NBA, NFL, or you hit it big and you had a $10 million hit. You could take, $2 million, put it up in the treasury bond. And if let's say you receive, what if you receiving up to 10% on that bond, which you won't be, but let's say you get 10% on that bond, that's $200,000 a year just on interest. That could be your bottle popping money or whatever for the year. Okay, a lot of people do that have tens of millions of dollars. because it's an easy way to just get interest on something that is considered
Is
safe. What you got,
am,
champ?
am I right in saying it's a much better rate on saving than actually keeping the cash
Yeah.
in a standard bank account, right?
Mm-hmm.
And it's more secure than say putting it in stocks, which could be quite volatile.
Exactly. So the one thing that this is when inflation, the way inflation is working now, you have to understand when interest rates are low like they are, there's really no reason to keep your money in a bond because you ain't getting that.
Hmm.
All right. So because they want you to spend, they want you to stay in the market, and but now spending, the velocity of money has gone too far. So they're raising interest rates to get people to actually get back in. So it's a weird little dynamic. Okay. Watch this. Watch it. He's gonna break it down.
And we'll also get the par value of our bond. We'll also get $1,000. We'll get 1,000 plus $50, 24 months from today. Now, the day that
You
this
see that? So at the end of the 2 years, you'll get that 1,000 plus your $50. So you'll end off with 1,200 after 2 years. Okay.
let's say this is today that we're talking about, the bond is issued, and you look at that, you say, you know what, for a company like Company A, for this risk profile, given where interest rates are right now, I think a 10% coupon is just about perfect. So 10% coupon is just about perfect. You say, you know what, I think I will pay $1,000 for it. So the price of the bond, the price of that bond, right when it gets issued, or on day zero, if you will, you'd be willing to pay $1,000 for it. You say, look, I'm getting roughly 10% a year, and then I get my money back. 10% is a good interest rate for that level of risk. Now, let's say that the moment after you buy that bond, just to make things a little bit, obviously interest rates don't move as quickly, but let's say the moment after you buy that bond, or maybe to be a little bit more realistic, let's say the very next day, interest rates go up. If interest rates go up,
it's funny. It's funny that he said this. You hear what he said, where interest rates don't move that quickly. You see how this was 9 years ago,
Yeah.
and we're now in a time where it actually did that. So it's ironic that he said that at that point. But he's going to show you what happens when you get a bond like this, and then all of a sudden interest rates go up. This is what's happening in the market right now. Watch.
So let's say that interest rates go up. And let's say they go up in such a way that now that they've moved up for this type of a company, for this type of risk, you could go out in the market and get 15% coupon. So let's say for this type of risk, you would now expect a 15% interest rate. Obviously, for something less risky, you would expect less interest than that. But for a company just like Company A, you would now expect a 15% interest rate.
So basically, this is the situation. What he's describing right now is basically the situation that's happening in the market, where people have got these bonds, and all of a sudden interest rates go up. So the new bonds that are coming out have a higher interest rate. Okay, they're paying you more.
Have gone up. Now, let's say you need cash, and you come to me and you say, "Hey, Sal, are you willing to buy this certificate off of me? I need some cash."
Now, I need some cash. I need some liquidity. What's happening is companies are being incentivized to move their money out of certain banks, forcing these banks to need cash, forcing these banks to need liquidity. The way that they get this liquidity is by selling the bonds that they're holding. So now they're having to go into the market and say, hey, can you buy this bond off of me early? It hasn't matured yet. But if you buy it, you'll get this rate. All right.
But yeah, just if I could chime in, because just explaining the whole term liquidity. A liquid asset is an asset that operates at a high volume, so you can get in and out of it very easily. There's high demand. All right. So what the brother's explaining there is like these guys need the money today, so they're trying to sell these bonds, but there ain't no buyers, and the less buyers there are, the less money you'll actually get for it, because it's all supply and demand.
Boom.
It's just like if you got a car that you know, everybody wants. At any moment you could sell it because everybody wants it. And you could sell it for the price that you want. But what if you got a car that nobody wants? Like maybe 2 people in the world want it. They're going to bid you down. And if you really need the money, you're going to have to accept whatever low price they offer you. So your asset becomes devalued. This is why you got, when you think about money, people hear about billionaires going bankrupt or millionaires going bankrupt, and they don't understand, because the average person thinks that if someone says they're worth 10 million, that they've actually got $10 million in the bank that they could go into the computer and go and send you $10 million. It doesn't work like that. They've got a lot of assets that might be valued at 10 million, but how quickly can they convert those assets into 10 million?
Yeah.
Like if you got a house that's worth 500k and you need 100k, or you need 400k or whatever amount of money to pay off some kind of loan that you need to pay within the next month or 2 months, and your house is worth 500k, how quickly can you sell your house? Do you understand? So a house isn't really that liquid, but a bond is supposed to be a highly liquid asset. You're supposed to be able to just go on the market, sell your bonds for whatever value that it is, and it's a good value.
Yep. But that's when interest rates are stable.
Exactly. But
But
when the interest rates are going up, all of a sudden your bonds are in demand. Now people say, yeah, I'll buy it, but I'll buy it at discounted rate. So where you might have had bonds that altogether were worth 10 million, now they're only worth like 4 million. So you're even in a bigger hole than you was. Yeah, you needed the whole 10 million.
exactly.
Or you need 8 million.
You got to realize too, this is other people's bread. This is other people's bread.
It's mad.
Okay, so what Required Quorum is explaining exactly what's going on. All right, y'all let me know on the comment board if this is making sense. And if somebody, Baba Kushak, could put into the comment board, the borrower is subject to the lender. All right, because the Fed knew exactly what the fuck they was doing when they rose interest rates that fast. They knew people who were holding these bonds were going to be put in a debt situation that was going to put them out there in the streets. They knew exactly what they were doing.
And you know what's even worse? I was just thinking about, if you're holding a 10-year bond, it's worth even less because the inflation. Man's like, I don't want a 10-year bond. Because in 10 years, that $1,000 bond ain't going to be worth $1,000 anyway.
Nothing.
So even inflation has made bonds, especially the long yield bonds, very, like, people don't want them. Why do I want a 10-year bond and then the inflation rate is already up at 15-20%?
Exactly. All right. So the water for everybody putting in Proverbs 22:7, the rich ruleth over the poor, and the borrower is subject to the lender. And ultimately, everybody is encapsulated underneath the Fed and these central banking entities. They're all subject to the lender.
Yeah, because in this world, the reality is people who are rich utilize credit. They teach you that, these guys, oh yeah, don't hold cash. Like a lot of these major companies, it's the smart thing to do. Instead of, you say you got $1 million in cash and you want to do a project, you don't use the $1 million in cash, because once you use it, it's gone. You use the $1 million in cash as collateral to get like a $2 million loan. Use the 2 million to pay for the project, furnish the interest, and then you still got your $1 million
that's collecting interest. It's supposed to be safe interest,
and it's liquid, so you can use it for this, and that works until your liabilities, something happens, a disaster, and you find yourself in a bad place.
Exactly. Okay, well let's finish this, because basically it's just going to give a visual for the brothers that's watching of everything that we just explained. Okay, he's literally finna go into it right now.
Need some liquidity. I can't wait for the 2 years for me to get my money back. How much are you willing to pay for this bond? Well, I'll say, you know what? I'm going to pay you less than $1,000 because this bond is only giving me 10%. I'm expecting 15%. So I want to pay something less than $1,000 that after I do all of the fancy math in my spreadsheet, it'll come out to be 15%. So I'm going to pay, so the price So in this situation, the price will go down. And I'll actually do the math with a simpler bond than one that pays coupons right after this. But I just want to give you the intuitive sense. If interest rates go up, someone willing to buy that bond, they'll say, gee, this only gives a 10% coupon. That's not the 15% coupon I can get on the open market. I'm going to pay less than $1,000 for it.
Right. So right now, bonds in the market are giving a better interest rates than bonds that you bought maybe a year ago or 2 years ago. So these people who are on a cash crunch, who need liquidity, that are trying to sell these bonds in the market, they're forced to sell these bonds at a discount in the market so they can get whatever cash that they can get. Well, it's still not enough to cover the cash that they need. Okay. And that whole situation was created on purpose. Okay.
So the price will go down. Or you could essentially say that the bond would be trading at a discount to par. Bond would trade at a discount. To par. Now, let's say the opposite happens. Let's say that interest rates go down. Let's say that we're in a situation where interest rates go down. So now for this type of risk, like company A, people expect 5%. People expect 5% rate. So how much could you sell this bond for? Well, if you weren't there, and if I had to just go to companies issuing their bonds, I would have to pay $1,000 or roughly $1,000 for a bond that only gives me a 5% coupon, roughly, give or take. I'm not being precise with the math. I really just want to give you the gist of it. So I would pay $1,000 for something giving a 5% coupon now. This thing is giving me a 10% coupon, so it's clearly better. So now the price would go up. So now I would pay more.
Okay. So y'all let me know on the comment board if that makes sense, so y'all understand the situation that a lot of banks and different companies and institutions and even governments, they're in this situation around the world where interest rates were so rapidly increased, and if there's a crunch on liquidity and you need cash now you're in a bad spot. And what's happening is that you have major players in the market that's putting out messages that's frightening investors, that's frightening venture capitalists, and making them move their money. And then you have big players that are insiders, that are just saying, hey, we became a part of this bank. Now we want to strain them out. We're going to move our money right now. Like Circle and Coinbase. Okay. All right. Did you have any points?
Yeah, I was just saying this also affects government. So this is one of the reasons why, these nations around the world are quite disgruntled with America, because what they've basically done is these countries have bought these government bonds, and then America's turned around, printed the dollar into infinity. So they're inflating their savings. All right. Now these smaller nations, right, they need this cash. So they got all these government bonds that are, if they cash them in 10 years, they're going to be damn near worthless. But at the same time, because they're putting up the interest rates, they're having a liquidity problem too. So there's actually a dollar shortage in the world, because these nations are finding it difficult to sell their bonds of treasuries that they own. Yeah. So this is causing hate towards America, because everybody's got these bonds and they're becoming more and more worthless.
Exactly.
Long term and short term. Like, what do you do? So do you just hold on to them now? If you hold on to them, inflation. If you sell them, you're taking a hit.
True.
So they need a new system to get out from underneath this.
Right. Proverbs 20:10, diverse weights and diverse measures, both of them are alike abomination to the Lord. So this mixing up of weights and unjust, putting this yield, this interest, and you flip it and you do this, and then you make these rules and regulations for certain people, and then these other people get a different rules and regulations. These are all diverse measures and weights. Okay. Did you have another point? You about to say something?
Yeah, exactly that. And the big problem is this inflation business. It's wickedness, because you've earned, that money or whatever the case may be, and now you save it, and then 10, 20 years later, it's worth half of what it is. You know,
Yeah.
and that's a big problem. You know, it's not supposed to be like that. If you save a talent of silver and you pass it down in generations, it's more or less supposed to have the same value. Like, how can it be worth 10% of what it was worth 30 years ago? Because actual inflation for the dollar is way over 20%.
Mm.
So you losing value fast.
Real quick, son. Real quick. All right. I'm gonna play this real quick. I'm gonna play this, just a little bit of this, and then I got another video I want
Is
to
that
play.
Jet Li?
Yeah, that's his son.
Pairs. The Federal Reserve is creating a new lending facility that guarantees access to 100% of deposits at SVB. And that facility is going to be paid for through assessment fees levied against banks, and not you and me. And also, this was not the government stepping up to support big, rich billionaire tech like Mark Zuckerberg or Elon. These are startup founders who are working 100-hour weeks for the equivalent of minimum wage in many cases. All in the name of building.
Skip me to the
And
point.
that's exactly what happened in the 48-hour period. True growth. Okay, so I'm off my soapbox now. And that's not to say that SVB itself shouldn't suffer consequences. Their shareholders and executives deserve to be wiped out. And that's exactly what happened in a 48-hour period when the company went from being worth $16 billion to nothing in the hands of the FDIC. And it was a crazy fall from grace because in 2021, SVB seemed to be rolling in the dough. Deposits more than tripled from $60 billion to $190 billion in 2 years. As more and more money poured into venture capital and startups from Wall Street hedge funds and corporates, they all parked their money in Silicon Valley Bank.
Now, a lot of this money came from the PPP loans. So you had a lot of these startup companies. They was doing this and that, but then you had the time where basically the government was like, "Here, sign up for this. We'll give you $1 million. We'll give you $1 million. We'll give you $2 million. Here you go, player. Play on, player." So not only were these banks and big corporations applying for PPP loans, then you had a lot of small, medium-sized businesses applying for them too. And what do you think they was doing? They was putting it into these different banks, going into different ventures. So you had an influx of just an inflated amount of capital in a 1 or 2 year span.
The problem was, where do they put all that money and still make an attractive return? So their search for yield led them to bet big on mortgage-backed securities to the tune of $80 billion. Well, we all know what happened then. The Fed raised interest rates faster than any time since the 1970s, from 25 to 475 basis points. So when people started pulling money out, SVB had to sell their bonds, which were trading at a much lower valuation all of a sudden. And at the same time, the tech markets corrected by 75%.
You see where it said they had $21 billion worth of bonds, and they had to sell that shit for 1.8. That's a loss. That's a loss, my guy. That's an L, my guy. That's an L.
Wrecked.
Through. Imagine having something worth 21 bill, and you can only get 1.8 bill off of it.
Is he going to talk about how they were a lot of these banks have their own valuation mechanism? They don't use the market rate.
I don't think so.
Yeah, that's another thing that was going on. So these banks say their bonds are actually worth like 1.8 billion according to the market. They actually will still have it on their books that it's worth 21 billion. It's just there, man. It's fraud, man. But yeah, they're allowed to have their own valuation methods so they could show their shareholders, oh yeah, it's 21 billion. We're good. We got the assets. It's like, nah, it's not worth 21 billion, bro.
Heard. Okay.
And VC funding dried up, which caused new deposits to fall. But with bond interest rates at historic lows and the Fed set to increase them, how did SVB not see this coming? One factor might have been the board of directors, which was dominated by venture capitalists, consultants, and startup founders, rather than the stereotypically more conservative bankers with more experience. The chief risk officer, whose job it was to monitor all of this, stepped down in April of 2022, leaving that role vacant for almost a year. But even with all these mistakes, SVB was still solvent.
Now, so you have people called risk management officers, and they're critical to large businesses. All they do is assess risk in the market and tell you, don't do that. Hey, this is what's coming up. We need to move here. They use algorithmic bots. They use algorithmic schemes to know where predict where the market's going. This is what I tell you, bro. The risk management people can tell Chick-fil-A you buying too much chicken on March the 3rd of 2025. You need to decrease that amount of chicken y'all buying. It's that precise.
And that conveniently they weren't there. It's all plausible deniability.
And conveniently, this bank with all of this stuff going on, you're gonna leave your risk management person with one of the most critical people in your business just gone for a year. Come on, my guy. This bank itself is a part of the whole scheme.
Yeah, did you see that their number of their headquarters is 3003, which is 33, and they also they were the 33rd ranked bank in America. So they and I think it was was it who had it was it Circle? They had 3.3 billion in there. So they were just playing, their hands are all over this thing, man.
Yeah, man.
Whenever you see that 33, you know it's like it's witchcraft, man. This was
a controlled demolition. Wait, we go. Hey, I'm just slowly progressing with the information. You're gonna see by the end of this. This is just all a part of the M.O.T.B move. Okay? You good, bro?
Yeah, calm.
All right.
This isn't like 2008 when banks did lose money on defaulted mortgages. SVB's assets were in good shape. Yes, they were lending venture debt to risky startups, but it was only 10% of their assets and they hadn't defaulted en masse yet. Most people estimate that the value of SVB's holdings is still greater than their deposits. But that doesn't matter in a bank run. And that's because banks make money through something called maturity transformation. They take your immediately liquid cash and invest it in assets of varying illiquidity, like mortgage loans and treasuries, that generate a net return for the bank. So the money isn't there today, but it will be there at some point in the future. The problem is, on a single day...
And that's really how the wealthy live. That's really the level you want to be on, okay? And that's really where you want to be. What's called workless wealth, where you have a certain amount of assets and it's just accruing interest. You just do what you need to do based off the interest that you bring in. You never touch your principal base. As a matter of fact, you just grow your principal base and you compound on the interest that you're receiving every year. That's really where you want to be at in life. You know, basically, that's how we do that as humans. It's called kids. It's duplicating yourself.
Yeah, children are long-term assets.
And a child is a long-term maturity asset. You build
short-term liability.
Mm-hmm. You just a major short-term liability in this world, right? But that's what you do.
Customers tried to take out $42 billion from SVB. If any bank had 20 to 30% of their customers ask for their money on the same day, they would go down in flames. So that begs the question, who precipitated the run on the bank? When SVB announced they were liquidating some of their bond holdings for extra liquidity and raising $2 billion in equity to cover the loss from the sale, that raised eyebrows. Now, you might not think...
You want to make that point, bro?
Which one?
The one you posted on the comment board. Was it you?
Oh, no. I was just saying to
I think that's a good point.
Jim is Hawaii that what you mean about the shadow stats?
Yeah, and that scripture.
Yeah. I was just going into that, posting that scripture because these guys, they're just lying, man. The whole system is about deceiving and lying and misleading the people. Even a lot of these top business people, they just get played in the market. You know, they got this guy Jim Cramer. You know Jim Cramer, right?
Mm-hmm.
He keeps telling these people to buy this and buy that, and then they know that later on the line they're gonna F it up and take all their money. But if you go to Google and type in shadow stats, it's an actual website where they run the numbers themselves, and what you will find is the inflation numbers are always higher than what the government say. Same with the job numbers. Like any number that's a negative number, the government usually try and like lessen the blow. And then so they got statisticians that go and do it themselves. So inflation is actually closer to 20%. It's usually double what they say it is. So yeah, you could check that out. Shadow stats.
Gone. Let me keep playing this, okay? Uh-oh.
That $2 billion compared to $160 billion in deposits would be a big deal. But the issue is SVB had to go into a quiet period during the public offering for legal reasons where they couldn't explain themselves. The tech world was already on high alert from the collapse of FTX and crypto bank Silvergate, and the panic intensified after SVB CEO Greg Becker held a phone call with customers saying clients needed to band together, and that was when the equity value of SVB crashed by 60%. Now, what happened next was a shock, and this is how it all went down. In the VC world, word travels fast, and that's because for VCs to be relevant, they have to see lots of deals, and so they collaborate all the time in these hush-hush private Telegram and WhatsApp groups. And as soon as the news of the stock crash came, every VC was talking about it in their group chats. And then I and others started to hear rumors from friends at Founders Fund saying they're going to get out.
Yeah.
Then it was
so venture capitalists, they create groups, which I got one time I got to actually, one of my homeboys put me on three-way into a venture capitalist call. And I was telling you about this Required Qualm. They was talking about $200 million like it was $150, you know.
Damn.
And so I was just in there listening. And so they was talking about HelloFresh, and they was talking about all these different companies that they had acquired, and they was talking about these new deals that they was going in on. We're gonna do this, you know. I was just like, wow, just listening to them break down companies, talk about what they want to do over the course of the next 2-5 years, what they want to invest in. So they on top of everybody's books. They're looking at every company. They're looking at their monthly income. They're looking at their outstanding debt. They're looking at their projected revenue streams. They're looking at, their scalability. They're on it every single day, bro. And they're able to move millions, hundreds of millions of dollars in minutes. That I'm not exaggerating. I'm not exaggerating. They're able to move hundreds of millions of dollars in minutes. And it can completely ruin an institution, because if the VCs, if the venture capitalists that are down with you, all of a sudden decide they out, you finished. You're done. And it can happen overnight. And we literally watched it happen. It can happen overnight. Okay?
there's folks at Kotu and Sequoia and Iconic and so forth. And once you hear that, you're thinking, wow, I've got to get out before everyone else does. And so now with that knowledge, you as a VC can go tell 20 of your companies in the next 5 minutes. And then, of course, they're telling their founder friends that my VCs are telling me to get out. Suddenly, the whole valley knows it and is running for the door. Silicon Valley is...
So what if the elite got people planted in all these different spots? They're watching us on WhatsApp. You know what I'm saying? You don't think they got somebody in all these different venture capitalist groups say, hey, get out of Silvergate. Hey, get out of Silicon Valley Bank. And going and telling them specifically where and when to move their money?
Didn't the Rothschilds do that with Napoleon?
Come on now.
They spread rumors.
Did they not do that? If they did it during the time of Napoleon, you don't think they can do it now faster, quicker, more efficiently? Okay.
Unique in how intertwined it is. And that makes it so much easier to spread this fear. But at some point, the fear actually becomes rational. And that's the crazy part of this. And part of that is because there's this huge concentration effect in Silicon Valley, which is really run by just a few individuals at 20 or so mega funds. Funds like Sequoia have massive portfolios of hundreds of companies holding billions of cash at SVB. If they're pulling out, SVB is in trouble. So this is all game theory, but there's no downside to taking your money out. And the upside is you might save your company. So it's actually a completely rational decision individually to take out your money. And by the afternoon, it was really clear that those who listened and got their money out were in much better shape than the ones who didn't.
So there's a lot of things that's going on in the background that you watching on the news, you thinking this bank they just some whole ass niggas, But there's way more going on into it. You see? Let me see what we got on the comment board. You got anything, bro? GMS down under Australia, Proverbs 28:8. He that by usury and unjust gain increaseth his substance, he shall gather it for him that will pity the poor. That's what we're going to see in the end of things. That's right. Then he put Sirach 34 and 21. The bread of the needy is their life. He that defrauded him thereof is a man of blood. Absolutely, man. And that's why Require Quam opened up that we're sheep in the midst of wolves. We're in a situation where these people, what I call predatory capitalism. This is not, Esau likes to vaunt capitalism as if it's some free enterprise of business and your ability to get rich. This is a predatory capitalistic system where there's no true rules. It's dog eat dog, every man for himself. It's just a digital wild, wild west where, it's a bunch of frauding and defrauding going on. Okay. Boom. Did you have something, bro? Because I got a couple more clips that I wanted to play.
No, we can keep going.
We can keep going. All right.
Mm-hmm.
All right. Y'all know I had to pay. I had to play my homie here, Kim. She always holds us down.
Hello and welcome to the
I always
Kim
say it's Kim Iverson. She's one of those. Brothers were sending this video out. She, we've been subscribed to her for a while. She's been consistent. Okay. And so if you're not subscribed to her, I think that's a good person to be subscribed to with basic news and information. And Neil McCoy Ward, I'm not going to play any of his videos today, but he's consistent as well. So if you bros are looking for a place to where you can get, kind of like alternative media, where, people who actually use information and they ain't going to just say something. They're going to bring information, not just some random dude sitting in their car. Keisha talking about, girl, listen to what I have to say on a TikTok video. No, they're going to actually come with information to where you can go and research it for yourself. Okay.
Show. Thank you so much for watching. So Friday, Silicon Valley Bank collapsed after widespread industry panic caused a run on the bank. Now try to put your disdain for elitist Silicon Valley censor czars aside, and let's take a look at the bigger picture of what's happening, because it's incredibly frightening. Essentially, the government is seeking to gain greater control over big tech, which will ultimately mean greater control over us. And we've seen what was revealed in the Twitter files, how the government infiltrated the big tech platform to censor Americans. We've seen how rollouts of things like ESG scores are being used to force companies to comply with a certain agenda or else. The government seizure of Silicon Valley Bank and subsequently the Signature Bank of New York should set off loud, blaring alarm bells. Over 90% of tech startups bank with Silicon Valley Bank. And interestingly, Coinbase, the largest crypto exchange.
90% is ridiculous. That means that these companies were moved into this bank. It's not by luck. It's not by chance. It's not because they just have better marketing. It's because tech startups were moved into this bank for a reason. Okay? Understand that.
Exchange in the U.S. just announced mere days ago its move to Signature Bank of New York, and then the government seized it. You want to control someone? Control their money. And do you know what the government blatantly states they want to do? Control big tech and control crypto. Coincidence? It's important to understand that Silicon Valley Bank was not insolvent. It was illiquid. There's a difference. Illiquid means it couldn't come up with the cash customers demanded at that very moment. And the reason they couldn't was because suddenly about 20 to 25% of the money the bank managed was being demanded by customers all at once. Now, no bank in America could handle that sort of demand. Any bank would go under in the event of a run of that magnitude. Unlike the banks in the 2008 crash, SVB didn't invest in risky assets or make bad loans with its customers' money. It actually did one of the least risky and supposedly safest things you could do with excess customer cash. It bought treasury bonds. Treasury bonds are guaranteed if you wait till maturity. Now, lots of banks hold bonds. In fact, the Fed recently encouraged banks to buy them rather than lend customer cash in order to get cash out of the system and into reserves in hopes it would reduce.
Because nobody was holding bonds. Because at a low interest rate, why would you hold that bond when inflation is so high? If you got inflation that's at 5%, why the hell are you going to put your money into a bond that's only going to pay you 2%, 3%? That means you're losing against inflation year over year. So companies at first wasn't holding bonds, but there was bond incentive programs and stuff like that some of these companies jumped into recently. Now the Fed did this knowing damn well they're gonna be ridiculously raising interest rates. Gotcha, bitch. Let me know if that makes sense to y'all. They got caught. They set traps. They set snares. Mischief. That's what this is. All the scriptures that the brothers are posting.
It's inflation. So many banks bought bonds. The Fed encouraged them by giving those banks who did what the Fed asked favorable status. Don't make loans or investments with customer deposits. That would just inject money into the system, causing further inflation. Instead, buy bonds so that the money is tied up somewhere else, which would then reduce inflation. Well, it tied up the money all right. On top of giving the Fed their customers money at the behest of the Fed then raised interest rates rapidly. That meant that those bonds were no longer worth what the banks paid for them. Now, that's one way to discourage a bank from coming along and cashing them out. Suddenly, Silicon Valley Bank needed that money back, but the bonds the Fed sold them were now worth less because the Fed devalued them. And the run got started because billionaire investor Peter Thiel saw the bank was over-leveraged in bonds and called companies in his portfolio to strongly suggest that they bail out and bail out fast. Now, the bank actually would have been okay if the run hadn't happened, or if the Fed actually did what the Fed was supposedly created to do, which is help prevent bank runs by injecting liquidity into a solvent bank when too many customers are demanding too much money all at once. The Fed injects liquidity into solvent banks all the time to help them out when needed. One question we should be asking is, why didn't the Fed do it for this solvent bank this time? Why did the Fed let the solvent bank fail? Again, it wasn't because
So now when you look at this bank, their numbers was good. Their numbers was juicy. So it's weird that nobody came and bought the bank when they saw that they had liquidity issues, and it's weird that the FDIC didn't just help them out and help, knowing that they bought these bonds at the advice of the Fed. just give them a loan.
It's almost like all the people who are capable of buying the bank were told not to.
And it doesn't even make sense. If they had just problems with having cash, you would think the Fed would just give them a loan and say, "Hey, we got you, bro. Y'all good for it. Close out your depositors and then pay us back like this," you know. But instead, they woke up with violence. They wanted violence. They wanted violence. They wanted a controlled demolition of the current systems, and also they want to bring into question what to do with current tech and crypto. So to the layman, it's like, oh, we need more regulation in these markets because these banks are out of control. They're failing. You can't get your money. They're not safe. And so the Fed is coming out here like, yeah, we got your back, man. We got you. We're going to pay these depositors. We're going to shut these guys down and put them in jail. And then they're going to come with regulation. Okay?
Bank made risky investments or bad loans. This bank bought bonds, lots of them, from the Fed. Now, the Fed has the power to pick and choose when to help a bank and when to let it fail. And this was a bank with good assets and great clients. In fact, the biggest banks, the very banks who are the shareholders of the Federal Reserve, coveted the clients of SVB for a very long time and wanted nothing more but to gain Silicon Valley's business. And now they can, because Silicon Valley Bank is gone. Now there will be further consolidation of smaller banks into the larger ones, making it all that much easier to roll out a central bank digital currency and social credit score for us all. Again, you want to control someone, control their money, and that's ultimately the end goal.
Now, so Kim be on point, okay? That's why Kim be. That's exactly what they doing, bro. And this is what we've been talking about on the World War III algorithms for years. All through the spirit and power of Yahweh Shem Yahushua. They're gradually getting everybody prepared, and they're going to roll out these CBDC'S. And it's going to, and they're not going to do it first with the implantable chip. They'll do it with something else, and then they'll lead into the C-HIP. They'll lead into it. It's just going to piece by piece move along, but they're moving faster. All of this stuff was really started to be mentioned in what require Quan? When did they start talking about CBDCs? 2020, like the middle of 2020.
Yeah, and even then, it wasn't really mainstream like that. It really went mainstream last year.
Yeah, and we did a video on it. I did. I know I did. I just because I just posted a CBDC video on this page, and now I did that video like a year ago. It was on my other page, but people didn't really watch it, so I uploaded it here. And since that time, they've accelerated this stuff exponentially. Okay.
Mm-hmm.
Now, when you look here at this article, I'm on centralbanking.com. This is March 13th, 2023. SWIFT completes cross-border CBDC settlement pilot. Okay. Now, I believe that the algorithm is called the big picture. In the big picture, I talk about the SWIFT system and SDRs and how they're gonna do all that. The SWIFT system basically is like it's like the regulatory system of interbank communication. So if you got this bank over here in Canada, the way it's going to execute funds over there in Great Britain is like this. The SWIFT system is how they execute sanctions on different companies and corporations. This is how they cut you off from being able to do international business, the SWIFT system. So it's an overarching system that connects all the central banks and the subsidiary banks, the little baby daughter banks that are connected to it. Okay? Brother Tazapanya Benyamia put Psalms 64:6. They search out iniquities. They accomplish a diligent search, both their inward thought of every one of them, and their heart is deep. Right? Kind. That's exactly right. I can. Which link you talking about? The big pictures. Brother GMS Tazaba put. If I have time, if that's what he's talking about, I'll look. Okay, but anyway, going back, yes, they search a diligent search. Did you have a point, bro?
No, I was saying even the BIS in just finished off some pilots and stuff as well.
Kind. So when you go into this article, it says SWIFT is moving into the second phase of its cross-border central banking digital currency pilot conducted with 18 central and commercial banks. Banque de France, the Deutsche Bank, Bundesbank, and the Monetary Authority of Singapore participated in the first phase. Participants conducted trials in a sandbox using APIs and two blockchain networks, Quorum and Corda, as well as a simulated real-time growth settlement network. Participants sent 183 payments in the sandbox environment. Okay, and I'm not going to start no trial or whatever. So all you got to do is type this title into the search engine. It's going to pull right up, and you'll be able to go and look at this article. But the point is, the headline is really the only point that I really want people to understand, is that they want this to be the standard across the world, and to have competing cryptocurrencies and all that's not regulated by the central system. No. We cannot have that.
Well, the ultimate issue is that the term cryptocurrency is a bit of a misnomer. Mm-hmm. People think cryptocurrencies, the majority of cryptocurrencies are not designed to be money.
Facts.
Money is literally access to computing. That's all it is. It's access to computation. So ETH is not money. ETH is the ability to access computation. It wasn't meant to be money. There's only a couple cryptocurrencies that were designed to be money, and those have settlement times below like 3%. 3 seconds. So what they're going to end up doing is they're going to regulate it and make it clear that these are not legal tender. They're not money. CBDCs will be money. Those will be commodities to utilize those particular blockchains for whatever the utility that they're supposed to be utilized for. And the ones that don't have any utility will just be outlawed and banned, and nobody will be using them. But in terms of this new SWIFT CBDC settlement system, you have to understand as well that this new Swift is having to change to incorporate these CBDCs, but in itself, it kind of makes Swift not the one in control, because Swift is only in control at the moment because it's a conglomerate of banks that run the United States dollar rails. But under the CBD system, you don't need the dollar as the reserve currency anymore.
Mm-hmm.
You don't need to use these dollar rails. So now they're going to be like the BIS said, what they're going into is an interoperable system whereby all these CBDs can be connected on one unified ledger. And I believe they made that statement last month. You could Google it, type in unified BIS unified ledger. And they made that statement last month that all these CBDCs are going to have to be interoperable on a unified ledger with the ISO 20022 standard.
Yeah, one of the brothers mentioned the ISO 02. Do you want to go into that real quick?
I mean, yeah, we can do. Let me share my screen and then
I got you, bro.
Where is it? The ISO.
Yeah, because I saw a brother mention that, and that's something we was talking about before we kind of turned the camera on. But all
Yeah,
of
so
all this stuff is connected.
yeah, it's all connected. So I shared my screen. Coincidentally, as this situation has popped off, where is it? This is what I was talking about with the BIS Innovation Future Monetary System. They what's it called? Unified. It's speak about a unified programmable ledger in a public-private partnership. So they're gonna have most of these blockchains are set up by private companies. So they're gonna have a partnership with a particular public-private company, whichever one that may be. And then that ledger can be used to interoperate between all the different CBDCs for cross-border payments. But where is it? The ISO 2022 is a flexible standard of financial messages that enables interoperability between financial institutions, market infrastructures, and the banks. So basically, the interoperability means that everyone's on the same page and they can share the same information about you. It's all about you. So we're going into this what's it called again? The carbon stuff.
Mm-hmm.
They can have it where you can make a transaction, and along with that transaction goes all your information, and it's easily then goes from one person to one institution to another because they're all running the same standard and programming. New World Order. So if where did I get it? Where did I have it here? I'm trying to find where I had the ISO. So lucky, I had it here. It just disappeared on me.
It's all good, bro. It's there.
Where the hell is it? Hold on. Let me just find it again quickly. Swift ISO 2. So Swift is just actually coincidentally changing over to the ISO in a couple of days.
Mm.
I literally just had it up and it disappeared. Right, here we go. So what is ISO 2022? Starting in March 2023, the way that the Swift community exchanges payments messages will be transformed with ISO 2022. This will unlock huge opportunities for financial institutions, such as boosting operation efficiency, enhancing customer experience, and enabling innovative new services. So this is basically a new standard that the CBDCs are going to be built upon, and it's literally Swift is the whole payment system globally is changing over between March and November this year. So it pretty much starts this month. So yeah, we in that time.
Kind.
And here we have it. This article came out yesterday for Forbes. Whether private or public, the US needs a digital dollar. So make of that what you will. It's-
Look at that. And it's all centered around what's happening with that bank. I see.
yeah, and then look. It's got the picture. You zoom in on the picture, right? It's you see it there,
None of
3003.
those people that are standing there are even allowed to deal with that bank. You know, Silicon Valley Bank is for business people. Like these. Anyway,
There you go, 3003.
wow. Look at that.
Yeah, these devils, man. But yeah, they're using this thing to push the need for a new system. And yeah, we could continue, Ark. I just wanted to show you. Go search this article and you read what this guy has to say. And it's in Forbes. Yeah, they're really pushing it now.
Right.
But yeah,
Right.
go on. I know you got more clips.
All right. So when you look at this thing, the brothers Zakar, Taza Yawan definitely he put up some good scriptures. But the one I'm just going to highlight is that one that he put in Psalms 141:9, because it's exactly what they're doing. In they're laying snares, they're setting traps, but through the Spirit, that's why the Most High set up his watchmen. If somebody wants to put up a watchman scripture, it says, "Keep me from the snares which they have laid for me, and the gins, which is basically a trap of the workers of iniquity." And all of these things are traps and to cause chaos. And we always, talk about how they want to bring order out of chaos. This is nothing but a mechanism of chaos for them to bring their so-called order. Okay, so I'm gonna play this right here. Get to the point now.
Yesterday, I gave you a breakdown of what's really going on with the collapsing.
Now, if you want to go watch this whole thing, she did the collapse of Silicon Valley Bank is meant to control big tech and usher in CBDC. All right, it's just a 6-7 minute video, right? And then she came and followed up with SVB, Signature Bank, and Silvergate were purposefully collapsed in order to crush crypto. And it's bigger than crypto. It's really the corporations around it, and it's all about regulation and getting your mind right for CBDCs. The water anointed refreshing. Isaiah 62:6. I have set watchmen upon thy walls, O Jerusalem, which shall never hold their peace day nor night. Ye that make mention of the Lord, keep not silence. It's right, through the spirit and power of Yahweh Shem Yahushua, you see, the Most High put the spirit on the apostles and the elders and those that we've learned from to not keep silent and to teach. And all of us that were born in the spirit thereafter, we're here now. We're all preaching. We're all here preaching and teaching, okay? Going in on these different issues and topics, okay? And just listen to what she says.
Of Silicon Valley Bank and Signature Bank of New York, that it was a controlled demolition in order to take them down. Now, these specific banks could have been saved, but the powers...
She watches my videos. No, I'm just kidding. But I'll be saying that shit.
That B absolutely chose not to. This wasn't just a sporadic run on a bank that's turned into bailouts. I know that's the going narrative at the moment, but that's not what happened. More information is coming out that should raise some serious eyebrows. Now, before we get into the new information, something that's relevant that I didn't mention yesterday is that the first bank to actually collapse was a smaller bank called Silvergate. Now, it's a smaller bank in the world of banking, but it was the biggest in the world of crypto. That bank went under on Wednesday. Now, the reason cited was lack of liquidity due to a bank run as a result of the FTX scandal. But then Friday, Silicon Valley Bank went under, which, though it wasn't specifically a crypto bank, it did hold lots of crypto startups and VCs as customers. And then suddenly Sunday, completing the crypto bank trifecta, Signature Bank of New York, known in the crypto world as the second largest crypto bank after Silvergate, went under. So now, where do you go if you have crypto? Let's go through some of the evidence that has come out to support this. Because I know in the mainstream, the narrative right now is all about, oh, this is just a bank run and people got scared and now there's a bunch of bailouts and they're going to be bailing out crypto bros. You're hearing a lot of that, or bailing out those tech bros. But this was a targeted assassination of these crypto banks. And again, the agenda is to wipe out crypto. Why? Because if you control the money, you control the people. And that is the point. They want to roll out their own central bank digital currency. They don't want you to have a different one. They want theirs. They want you to have theirs. And they want you to have your money in their...
It's funny because you'll hear all of these people in legacy talk about, oh, crypto is stupid. It's just worthless. It doesn't even have any value. It's a tulip bubble. Meanwhile, they're invested in CBDC companies. Meanwhile, they're learning more and more about blockchain technology and how to utilize it in finance. You got to see that these people are fucking hypocrites, man. There's a lot of use case for cryptocurrency, man. Point blank period. In a digital age, there's a lot of use case for it. And these world leaders, one of the things required, Kwame, if you want to speak on this, I would like for you to speak on this. I'm calling you out, bro. These people who are in the government, who are part of the Fed, who are part of the economic system, they're not idiots. They know what they're doing. You know, when they raise interest rates and they cause this failure and that failure, they knew that was going to happen. Okay, it's not just some guy that's on YouTube that's an economist and he figured it out. Nobody else did. Okay, these guys, they seek deep. When we just read the scripture to set these things up, they will create a SVB bank and encapsulate 90% of the crypto and tech market inside of it, just to collapse it and say, hey, we need regulation so we can do this, this, and this, and this, and this. They will do that. You don't think that they didn't know what was going to happen when they shut down manufacturers and the docks during the time of the pandemic, and they shut down business for 6-8 weeks? You don't think that they didn't know what type of ramifications that would have on the global economy? Of course they did. You don't think they didn't understand the ramifications of QE 1, 2, 3, and just giving people PPP loans? If we are talking about this on Great Millstone algorithms, you don't think they know that shit? Of course they do. The only thing that we have over these guys is biblical prophecy. So we're not tripping because we know it's leading to the kingdom. Glenn Beck is tripping. Dabu 7 is tripping. Vocab is tripping. We like, yes. Hurry up. Just do it already. Because it's going to lead to the kingdom of heaven on earth when you destroy yourself with your own crap, with your own mischief. You got it, bro.
The scriptures say, "Taketh the wise in his own craftiness." So they know what they're doing, man. But it's gonna lead to their own destruction. You know.
Yep. Somebody put wise Daniel, the scripture wiser than Daniel, on the comment board. Baba Kushat.
Yeah, they know exactly what the ramifications of their actions are. How could we know when they don't know? Of course they know. It's just that they're good at painting themselves as being incompetent. You know, oops. You know, it's like so that people don't burn them at the stake. But the truth is that they know. They always know. You know, these people are very intelligent. The specialized class, they go to private schools, man, and they're taught how these things work. You know, These guys over here in the UK, they go to Eton private school. Then after that, they go to Oxford and Cambridge. And so they understand these things, man. It's done on purpose. With a purpose. Mike, was it Micah 2:1?
Yeah, that's what we started out with. They devise iniquity. Very purposeful moves that they're making, okay?
And I'm sure they were average people who got caught up in the midst of that, because didn't they halt trading?
Yes.
Yeah, so I mean, think of all the average everyday people, middle class, upper middle class people. They're not billionaires, they got a bit of change and they dabble in the stock market, that lost a large part of their portfolio because they're not in the know. These elites, man, they don't care.
Yeah. The Wada Akyam, anointed, refreshing, put Ezekiel 28 and 3. Behold, thou art wiser than Daniel. There is no secret that can hide from thee. What was Daniel known for? He was known for his Most High dealing with him in prophecy. And what I like to point out is not just was the Most High dealing with him in prophecy, which is the highest form of wisdom. That's why he was prophesying to Nebuchadnezzar. And when you go into Daniel, the Most High dealt with Daniel. Damn, Daniel. Okay. But also, he was high level in arithmetic, geography, all manners of math.
If I could say this, how to manage a kingdom, because
Exactly.
they made him president, and in order to be
Right.
president, you have to basically, all the moving parts. You got to think of the short term, the long term, all the different areas, how they affect each other. I mean, if you look at what Esau's doing, he's managing a global economy, man. With this contagion, he started in America, now it's in Europe. I mean, what these guys are doing is pretty impressive.
Yeah.
But the Lord gave them that wisdom, but they're using it for evil.
I have to make this point right here. I did a word search by accident. I'm gonna go here. Now, when you look here in Daniel, just to show you, because we read the scripture here in Ezekiel, 28th chapter. The brother posted it on the comment board. Those people who are serious are taking notes right now. But those of you that are just listening and happy to be here, check this out when you read Daniel, the first chapter. And I'm gonna read. I'm gonna read the first few verses. Daniel 1:1. In the third year of the reign of Jehoiakim, king of Judah, came Nebuchadnezzar, king of Babylon, unto Jerusalem and besieged it. And the Lord gave Jehoiakim, king of Judah, into his hand, with parts of the vessels of the house of the Most High, which he carried into the land of Shinar, to the house of his God. And he brought the vessels into the treasure house of his God. And the king spake to Ashpenaz, the master of his eunuchs, that he should bring certain of the, and when you look up the word eunuchs, it's officers, that he should bring certain of the children of Israel and of the king's seed. So certain particular, he was being choosy, certain of the children of Israel and of the king's seed and of the princes. So some of those kids, we want to keep them. They're important. Verse 4, children in whom was no blemish, but well favored and skillful in all wisdom and cunning in knowledge and understanding science, and such as had ability in them to stand in the king's palace, and whom they might teach the learning and the tongue of the Chaldeans. And the king appointed them a daily provision of the king's meat and of the wine which he drank, so nourishing them 3 years, that at the end thereof they might stand before the king. Now, among these were the children of Judah, Daniel, Hananiah, Mishael, and Azariah. Okay, and so Daniel was a part of those that were skillful in all wisdom, cunning in knowledge, understanding science, and had ability to stand in the king. Basically, they could become a part of the king's court with knowledge of this of the land of Israel, with being able to learn the language of the Babylonians, the Chaldean language, and they could help out in managing the region and the area of Judah and the surrounding lands of Israel. So Daniel was a high level child, you know. Not only was he a high level child in mathematics, science, wisdom, he was blessed by Yahweh Shem Yahushua with prophecy and seeing the future. This is why when you read in Ezekiel the 28th chapter, it makes a strong statement. It says, "Behold, thou art wiser than Daniel." That's a very strong statement. Meaning you have access to ridiculous amounts of information and control and power. Okay? There's no secret that they can hide from thee. With thy wisdom and with thine understanding, thou hast gotten thee riches and hast gotten gold and silver unto thy treasures. And by thy great wisdom and by thy traffic, meaning merchandise, controlling markets, right? Hast thou increased thy riches, and thine heart is lifted up because of thy riches. This is what we see in the West. This is why they're moving forward with the most proud system that has ever been created. And it's called the mark of the beast system. And it's ridiculously proud. And honestly, it's stupid. See, pride makes you dumb. And they really think they're going to accomplish this. A diligent search for wickedness. This is why they set all these things in order. Piece by piece by piece, they're going about to try to accomplish this. Okay? Do you have anything, bro?
Yeah, I just noticed some breaking news. Moody's. No, it's all right. I'll just tell you. Moody's, the Fed, and other central banks may hold emergency meetings to provide guidance and prevent panic.
Exactly.
So
exactly. Now, I was reading earlier while I was listening to a podcast. Moody's is thinking about downgrading some of these banks that have the risk with these bonds and these mortgage-backed securities, and just let you know, it's just a setup. Literally, the Fed walked these businesses into these supposedly secure maturities. This is supposed to be safe debt that's giving you yield, and they literally pulled the rug underneath their feet by every single quarter ridiculously raising interest rates that they already knew the system couldn't handle, just to blame it on them and bring in unrighteous decrees. The brothers put Isaiah the 10th chapter onto the comment board, the Wada Zakar, just to bring in unrighteous decrees. Isaiah 10:1, woe unto them that decree unrighteous decrees and that write grievousness which they have prescribed. Now, Moody's, which, if you don't know what Moody's is, it's basically Moody's and a couple of other groups. Basically, they're the ones who decide what the credit rating of a business. They're the ones that decide to say, yo, this is a good business, you can give them loans, or this business is a junk business, don't deal with them, you cannot give them a loan. And according to you might get a AAA rating or a AA rating or a B rating. And according to that rating is how much you'll have access in the overall system to get loans and money, which if you can't get access to that credit, if you can't get access to credit, you cannot expand or grow a business. You're finished. Unless there's no way to build capital unless you're doing something illegal, which they will find out if you are, unless they want you to grow. And then they'll let you do your illegal enterprise. Okay? So basically, all this stuff was set up so that they could bring about unrighteous decrees. And we're watching it happen real time. Very interesting. So you saying this meeting is going to happen tomorrow?
Yeah, they haven't announced when they're going to do it, but it looks like a few things are happening because of the Credit Suisse situation. I think the Bank of Switzerland's going to give them some liquidity, so they might try and stop the cake contagion for now from there. I also noticed that the Fed have just released that they're going to launch the Fed Now instant payments in July. So it's funny all this stuff's coming out right about now.
Mm-hmm. Yeah,
But
was
yeah,
it
go on.
Lynette Zhang? She was talking about. She's like they want to get this stuff done before June. Well, they needed a crisis before that time so that they could justify it. You know.
Mm.
And here we
Yeah,
go.
go on. I just wanted to drop that real quick. Oh yeah, it says the Bank of England are holding emergency talks as the Credit Suisse crisis worsens. So yeah, things are happening right now. So we'll see.
Mm-hmm.
Their banks so they can control you. That is the ultimate agenda. I know that sounds like a conspiracy theory, but
And y'all let me know on the comment board if this is making sense, if the pieces are coming together for you, Akiam, prophetically. You know what I'm saying? For those of you that came later, you're gonna have to go back to the beginning of this stream to understand more of the fine details of what's going on.
at this point, if I could just count how many of these conspiracy theories have come out to be true, I think we'd be winning some Olympic gold medals at this point. So let's go over some of the evidence. So first of all, came across this on Twitter yesterday when all of this scandal was coming out. Here's this tweet. This guy was saying, this is Warren Togami, and he says, this is Operation Choke Point 2.0. Today I heard this from the management of a small U.S. bank. Today, basically every bank regulator is calling every bank and asking for their liquidity report, asking whether they plan to apply for the Fed program, and asking whether they have any exposure to crypto. They're definitely trying to ensure that smaller banks don't touch this area. So that is evidence number one. Then we roll into some of the news that was coming out yesterday. Bad news for crypto. Here's some of the headlines. Silvergate, SVB bank failures create a huge problem for crypto. There's another one from Forbes. Silvergate and Signature demise may torpedo a key crypto growth driver. Okay, news headlines aren't exactly evidence, but you see where this narrative is going. So now we start to find out today, because now it's coming out and people can't keep their mouths shut for too long, because ultimately this is going to come out. Believe me, although I know right now the Fed announced that the VP of the supervisory of the Fed or whatever says that they're going to be doing an investigation on the supervising of SVB. So basically the Fed is going to be investigating the oversight of the bank that the Fed was supposed to be overseeing. That's what's going on right now. They're going to look into it. Don't you worry. They're going to get to the bottom of what happened to that bank. What a joke. They're going to investigate themselves before independent investigators can go in there and investigate. Before we get the real truth, they're going to come out with the narrative of what that truth is. So we find out today, because ultimately this will come out, even on Fox Business, we find out that actually Silicon Valley Bank didn't need to go under. There was a buyer for Silicon Valley Bank that would have taken over the clients. It would have just cleaned everything up, dealt with everything, would have been done. Watch this from Fox Business.
So they had somebody that would have helped, but they didn't allow it.
Andy Quarles said he would have been happier if the private sector, somebody bought the thing right out. What are you thinking here?
Yeah, I think Randy's right, and you're right. And, I have heard it from, people I have a great deal of faith in that were very close to the situation, that there were buyers who were willing to step in and buy the bank, and that the radicals at the FDIC basically weren't going to allow that to happen. I even heard, again, someone told me this directly that was close to the situation, that the Biden administration had a whitelist of companies that were allowed to buy the failed bank and companies that weren't. And so basically you could imagine they're so concerned about some bank getting a little bit bigger that they've decided to put all these taxpayer monies at risk. And I think it's something we've seen from the Biden administration really from the beginning, is that they've got this radical left agenda, and it doesn't ever exude any even common sense. And so here we are in the middle of a potential banking crisis. We've got people willing to step up and buy the company, and the radical left wingers at the FDIC won't let them do it. And so I think that's going to go down. It's something that we should have hearings about, and we should find out exactly what was going on. But I've heard it from people very close to the situation who I trust, and you saw Senator Haggerty was tweeting about it too. And so it's a scandal, frankly. And the problem with bailouts, right, is that suppose that you're a bank right now and you're not really doing so good. You took some bad bets. The bets are down. Well, if your guys are going to be bailed out, if your depositors are going to be bailed out no matter what you do, then you should swing for the fences, right? You should take the biggest risks that you can to try to, double down and get yourself out of trouble. And so what usually happens when regulators come in and try to, outsmart the market and provide backstops is that risk goes up, and eventually something really horrible happens. And I hope that it's not this time, or it's way off in the future, but I think that's the risk of where we are, is that there's a moral hazard risk that people are going to, take bigger risks to dig themselves out, and then when they lose that money, there's going to be even more and more bailouts that have to be done.
I'm very concerned.
So there you go. Right there. The SVB had a buyer, but they stopped it. Why? We don't really know. They just didn't like that company. They had a short list of companies that were allowed to buy that bank and others that were not. Would love to see that short list. Who was allowed to buy it? Was it only the big four banks? JP Morgan Chase? Was it just Citibank? Basically the ones that own 80% of the shares of the Federal Reserve in New York. Is that who was allowed to buy it? Only them? Not these other banks that, they would just start back up and tech would have another place and crypto would have another place and that would be okay. No, they want to kill crypto. That is the point. So Barney Frank, now I know he's become like this controversial figure in all of this because he sat on the board of Signature Bank of New York, and so people are saying that it was Barney Frank.
Oh, another point is this guy that was the CEO of Silicon Valley Bank. He was a part of the Fed. He was a part. He sat on the board of the Fed. These guys are all tied into this shit, bro. It's all of them are in on it. Signature Bank, Silvergate, all of them are in on this.
Actually, who, even though he was part of the Dodd-Frank Act to help regulate banks, he then called for a rule change to deregulate banks. And if he wouldn't have done that, if Barney Frank from Dodd-Frank wouldn't have done that, then the bank wouldn't have collapsed. Well, Barney Frank has a different viewpoint of this. And he actually calls this out and says, in this AP article, look at this, Signature Bank seized to send banks a message, Barney Frank says. And he says a regulatory takeover, this is the article itself, a regulatory takeover of a New York-based bank was intended to send a message to U.S. banks to stay away from the cryptocurrency business. A former member of Congress who was on the bank's board said. Former U.S. Rep. Barney Frank said Monday that he believes the state officials behind the action were trying to make an example of Signature Bank in a takeover that he said was the wrong move. Despite a wave of withdrawals, the bank situation was under control before regulators swooped in. He said, quote, "This was just a way to tell people we don't want you dealing with crypto," Frank said in an interview. Now, you don't believe Barney Frank maybe because you're thinking, well, but he was the guy that deregulated. It was all his fault. We'll take a look at this. This right here is... there we are. This is the closure of Signature Bank seems unwarranted. Here's this tweet by Arthur OX. The closure of Signature Bank seems unwarranted as their ATM unrealized losses aren't that big compared to its overall asset base. Some other factors likely at play here, and they're calling this Operation Choke Point 2.0, is these are the unrealized losses. And you can see there, Silicon Valley Bank is the one that's got the big bar on the left. And you keep going across, and you do see Silvergate. Now, Signature Bank of New York, which is just way down the line. It was very, very little. They just...
So it's just kind of like, at 9/11, how this one random ass building collapsed that had nothing to do with anything that was going on. That's Signature Bank. Like, hold on, this business wasn't hit by anything. It was just, what happened to that building? Why did it collapse? That's Signature Bank. But it was a part of an overall sweep of these tech, crypto-based banking entities going down so that they could set the precedent of what they want to roll out, which is this whole CBDC system. Okay.
They didn't have these unrealized losses, and that is just the reality. But Silvergate was
yes, and that's a great scripture, arrows of indignation. We were going to get to this scripture, but it's a great point. Revelation 13 and 16, the brother posted, and he causeth all, both small and great, rich and poor, free and bond, to receive a mark in their right hand or in their foreheads. And I love to continuously highlight that point. And he causeth all. That causeth is vital to understand that there's a gradual cause to them doing this stuff. Right? And so when you get to down to verse 17, that no man might buy or sell, save he had the mark or the name of the beast or the number of his name. Okay? All of this stuff is happening to lead us into this system. Okay? Piece by piece by piece. It's evident. It's clear. And now, like we keep saying, prophecy is jumping off the page. It's jumping off the scroll. And it's in your face. If you don't want to see it, the Most High is just not dealing with you.
back to being actually by Sunday it was fine, and then the regulators swooped in on Sunday. So they just took advantage of this short window of Signature Bank of New York having a slight run, and then they were okay. They sorted it out, and the regulators came in and seized the bank anyway. So why would they do that? Why would they prevent the buyer from buying SVB? Why would they shut down Signature Bank of New York when it was fine before they showed up? It's like, hey, we don't need the fire department anymore. We actually put out the fire. It was just a little stove fire. Sorry about that. Egg carton caught on fire. Whoopsie. Put it out. Don't worry. You don't need to come in and put water all over my house. These fire extinguishers everywhere and just ruin everything, which is essentially what just happened to them. Now, here's something else that also supports that all of this is true. There's this bank, a bank called Custodia Bank. You've never heard of it, probably, because it is not, the Fed won't allow it to become a member bank. It's a bank that actually would be a 100% reserve bank rather than fractional banking. So rather than when you put your money into a bank account, the bank then goes and lends out your money or invests part of your money. They're supposed to keep 10% in the bank, and then they go and they lend out and invest the rest of your money. This bank was actually going to be 100% reserve banking. So it would have been the safest bank in America. On top of that, it was a bank for cryptocurrency. And you need a bank if you're in the world of crypto, because you need an on-ramp and an off-ramp for crypto. You need to be able to buy your crypto using US dollars, right? You want to be able to do that. And you also want to be able to offload your crypto. You want to be able to sell or convert your crypto from crypto into US dollars. So you need a bank for that on-ramping and off-ramping. Now, Silvergate played a big role for FTX being the exchange.
And she's continuously making good points. And I know for those of you who are paying attention, y'all like, yeah, let it keep going. No, you can go watch the rest of the video on your own. We're going to continue to make points. Because what's happening right now, she basically has broken down the bulk of what we want to talk about. Okay. And like the real main point that I wanted to hit on, she kind of consolidated it down and did a very good job of that. And we see the prophecies, which we just read, that of causing everybody, both small and great, rich and poor, free and bond. We're leading into that digital currency system. And, we've done lessons on the CBDCs and how it can be used with the CHIP. And we're seeing more of this propaganda being pushed that's going to lead to them trying to tell you, hey, you need to allow us to bring you order in your world. Now, Require Quam, I'm gonna turn it over to you because I know you had that one point about the Credit Suisse. Didn't you have an article or something on that?
Yeah. I've got this bit. Because the contagion is spreading, and like I said, we'll see how it unfolds, because they can always stop it at one point to carry it on the next step later on down the line. They have that power. So, but let me share my screen, and I'll play that clip from what's it called, RTD TV?
Because I had the one with Lynette Zane, but I think his is better. but she touches on it a lot, which I might highlight her just for brothers that don't watch her. To me, she has ITM Trading Inc.
Yeah.
And then that's her main page, right?
Yeah.
Yeah, this is her main page is ITM Trading Inc. Her name is Lynette Zhang. And you know, Required Quam, this is his favorite grandma. This is everybody's favorite grandma. She got a mean casserole waiting on. That's what you say, bro.
Yeah. She looked like she cooked a mean casserole, man.
Yeah, she got an apple pie waiting on you. But while you sitting eating your apple pie, she gonna tell you about everything you need to know. She gonna break it down.
You got to get her and what's her name, Catherine Austin Fitz.
Yeah. Yeah.
They're gonna have a cook-off.
They can have a cook-off. But yeah, this is a real good video. She just dropped this video going in on Credit Suisse and just kind of some of the things that she's been talking about over the years as well. But just due to time constraints, I'm not gonna play this clip. We're gonna go to the clip that the brother Required Quam pulled up because his is really good too.
Yeah, so this clip is good because what he talks about is how this is just the beginning, you know, that they could keep going with this thing, and which they will. And we've spoke already about the derivatives bubble on the algorithms, you know, which ultimately is the end game of just destroying the whole system overnight. But I'm gonna just play it, and he breaks it down very well.
At the comparison of size, because Credit Suisse is trillion, you know, high billions, trillion status. And so let me share with you some things here.
My name is Jim Rickards. I'm a former advisor to the CIA, Department of Defense, and the White House.
Here that just highlights. So here on the screen, let me put this up here. This is the Big Players Club. So we have systemic risk among the GCBs. And as of right now, there's not many clean and crisp copies floating on DuckDuckGo or Google. So I had to try to enhance this a little bit so to make it clearer, but you guys get the gist of it. But over here to the far right in this purplish or whatever are the U.S. globally systemic point important banks, J.P. Morgan, Bank of New Mellon, Goldman Sachs, Bank of America, Morgan Stanley, Citigroup, State Bank. We got Wells Fargo. And at the very bottom here, these are the European. The blue are the European. And at the very bottom right here is Credit Suisse. And so in the center of all this is Deutsche Bank. And of course, Deutsche Bank has not been in the news for the last 1 or 2 years, but I think it was 2017-18 was when they were making a lot of noise in reference to them also having problems. And I think somebody probably came in and backstopped some things on the back end. And at this point now we have 2 quadrillion of derivatives interconnected amongst these banks here. And so as the local bond market in the US has its
it's a 2 quadrillion. So this is basically what ESAU set up, man. This is basically like TNT wiring hooked up. You know, like when they demolish a building, they wire that detonation all the way through the building. That's what these derivatives are. And Deutsche Bank has been kind of signposted over the years as a key bank that if that fails, the whole system just is done. It's over. There's not enough capital in the world to plug that black hole. Like, what do you say? It's 2. I've heard people say it's like 4 quadrillion, and a quadrillion is a number that you can't even put into your mind. It's like it's redundant in terms of numbers. You might have just say infinity once you start dealing with above trillions. Like, what's a quadrillion? Like 1,000 trillion?
Like 1,000 trillion.
Oh my goodness, yeah. So you need to get all the money on Mars to cover that. You know what I mean? It's mad.
Yeah, 1,000 raised by the power of 5. It's quadrillion, right?
Yeah. So all these banks, this is all to do with these derivatives are like insurances and loans and all these different crap. And there's more of it than there is actually capital to cover it. So if there's any kind of systemic issue, it'll just sweep through the whole. No one was going to be able to pay it. Basically, it's madness.
Yeah.
In fact, it's purposefully difficult to explain, and that's how the con works.
yeah. That's why we have to do these algorithms where we show you all these cartoons to break it down to a little bitty piece so you can understand it, but they make it to where it's just like the wording is stupid, it doesn't make sense, and you just give up on trying to understand it. You're just like, I know it's wicked, you know what I'm saying? That's the only thing. Like whatever is going on is wicked, you know.
That's why it's hard to get these guys in court, because you have to actually understand what they're doing in order to say it's a crime. It's just too much.
Yeah, a quadrillion has got 15 zeros.
Yeah.
15 zeros.
Titan chokes off basically the lifeline of these banks here, because they're not able to really thrive in a high interest rate environment. And so those will lead to more dominoes falling. And let me share some more with you. And so this is what is at stake here for the global monetary system. This is Exner's pyramid. And so as of right now, we're at the very bottom. What we're witnessing right now is the bank money. We're witnessing confidence being lost in this bottom portion here. And so between the base money and the bank money, that's kind of where the contagion is starting on the small scale. And of course, the impact, or the primary driver, as Robert Kiyosaki mentioned, is the bond market. So government bonds. And these figures here are old. This is a close thing I could find that had all this on the screen. And so here's the dominoes that's falling. We got the money base, the government bonds, and then what comes after that? Securitized debt and list stocks, private businesses and real estate. And the last one to fall will be the derivatives. And so just to give you an idea as to how fast things spread and how hard things can fall, let me share with you a little video that I grabbed that really puts my point across. Let me grab it real quick. So I'm going to play this and just look at how all it takes is a little small hiccup that can tilt and bring the entire deck of dominoes down. So check this out real quick. Let me see if I can play this.
And 1 millimeter thick. And I will carefully place it.
This is what dominoes look like when they fall. So imagine this big block here. That thing shattered. So I thought I would just use that as a little bit of a prop, so you guys can see how it doesn't take much. All it took is that small little bitty, a tweezer of a domino he created, and he tipped it, and from that point on, everything failed. And that to me is a great comparison to this Exner's pyramid here of what's at stake. And if the SVB is being used as the catalyst, that's the small little tweezer that he had in his hand, then look at what's happening. What's to come above that? And so at the end of the day, according to what's on here, if you're not beneath this derivatives, paper, Ponzi scheme stuff, which is in gold and silver and things that are real, everything above that is ultimately a fiat illusion. And that even includes the prices, valuations of real estate. Because once again, the housing market is only solid as there is somebody on the other side willing to buy or able to buy the residence that you're probably trying to sell or whatever. So, okay, so that's just that. Hopefully that kind of makes sense, but that's
So basically, that's what we're looking at right now. They're demolishing the system in a controlled manner in order to bring in a new system and force the people into the new system. And when they do this is what's going to bring the time of Jacob's trouble and all these things that we preach about, because you got to imagine you have a situation where transactions according to the old system are not working. The currency is not viable. How do things happen?
Mm-hmm.
Do you know what I'm saying? Like, who's going to go to work? Who is actually working? How do resources move from one place to another? But now the government has to step in and say, okay, we're going to make it move. Now we need to control these systems, because everything's still going to be there. It's just the mechanism that makes it move, which is money, is now finished. Now they need to come with a new system to get it moving. But in the middle of all that happening, you're going to get Second Esdras the 15th chapter. You're going to get chaos. You're going to get riots.
Mm-hmm.
Race riots. And they're prepared for this. That's why they've been, practicing for martial law. That's why they've been militarizing the police. because they know this is what it means. But the average person doesn't believe that the system will allow it to get that bad. And this is where we step in and say, no, it's prophecy.
Blowing the trumpet.
We're blowing the trumpet, Revelation 12:12.
Yeah.
The devil shall come down onto you with great wrath, because he knoweth he hath but a short time. He really is going to pull the plug on his own system in order to bring a new system through, the M.O.T.B. And a lot of people are going to die. People are looking at this and winking at it. And if you notice, they had a lot of entertainment going on at the same time. The Oscars, you got the Ja Morant psyop,
yeah,
the Chris Rock psyop.
Yeah, because a nigga had a pea shooter. He looked like he pulled that gun out of somebody's purse. And they acting like he had like a bazooka and he was just shooting people. He did this stupid dance, which all the new dances are dumb as hell. I shouldn't be able to do the new dances. I'm too damn old. But I can do all them damn dances because they're stupid. He pulled out that little pea shooter and the whole world acted like he had a goddamn, like he had a rocket launcher in the club.
Then they show pictures of him in a strip club as if that's something new.
Right.
It's all, and it's all a psyop, because Nike would generally just pay money and the media wouldn't talk about it.
Yeah.
But for some reason, the media is just all over it. It's all psyops because they want to keep the people confused and distracted to what's actually going on, while they bring these new systems on board, get the infrastructure going, and they need to do it in a particular way. They don't just want to just bam. It's a controlled demolition, just like 9/11. It's a controlled demolition of the system, because they want to ultimately keep control, even if it looks like they don't have control. Right. So that's why we have to be extremely vigilant, because we're in the time where things can go downhill very quickly in a couple of months, 3 months, 4 months, 5 months, 6 months. We have to be vigilant, man. They can stop it at one step and prolong that step for a period of time, or they can move on to the next step. I mean, that's where we're at right now. They could prolong this part for 6 months, 8 months, or they could go to the next step. And next thing you know, another European bank has gone down, so on and so forth. So, that's why it's very important. Was it Romans, the 13th chapter?
Knowing the time.
Yep. We gotta keep our eyes on what's going on.
All right. We're seeing it piece by piece happen, and just like you said, bro, like they literally, if they wanted to, and what we've been seeing recently is they're moving quickly. They're moving headlong into this new system. They're not playing no games. Like, for all of us that have been watching this thing for the last 10, 15 years, especially for the apostles and elders, that's been 30 years, it's moving quickly now.
I mean, what we might see, and what brothers need to be looking out for, is over the next month or 2 months, what these central banks decide to do in terms of interest rates. If you see them increasing the interest rates, they're pretty much piling on the pain. If they decrease the interest rates, then they're prolonging it, but inflation is still going to go up. It depends on what they do. I think March 22nd is the Fed's rate hike meeting.
Yeah, if they pause that rate hike, they'll let you know they're like, okay, we're gonna chill out right here. We're gonna let whatever bad businesses that can't handle it fall. We're gonna acquire them, take them. You know what I'm saying? And then we'll go through another round. But if they can just headlong increase interest rates, we go up another 0.25%. They don't give a blank. They don't give a damn. They like, all of y'all can kiss my ass and hallelujah. And that's good for us, because that's going forward. That's just going forward the prophecies. So, you got something, bro? Because I was gonna bring out that scripture in Romans.
Yeah, no, I haven't got anything else.
Okay. Bring out the scripture in Romans. Well, the brother salvation of the elect put 2nd Ezra 8:50. For many great miseries shall be done to them that in the latter time shall dwell in the world, because they have walked in great pride. Yeah, and so we already understand what that means. Those of us that have been watching and paying attention, is those great miseries going to come with economic pain, political pain, the censorship, war, famine, okay, pestilence, more diseases being spread around the world. All of these things are prophecy. Great miseries are set to befall the earth. That's why we have to maintain the hedge of protection of Yahweh Shem Yahweh Shai, because as things increase, that's the only thing we're going to be able to. Money's not going to save us. No carnal preparations, nothing worldly is going to save you. All these alternative media sites are telling you to buy gold and you need to get your bug out kit, and that's not going to save you. What's going to save you is to come underneath Yahweh Shem Yahweh Shai. All right, now you know what? This in the NLT is pretty good. Romans 13:11. I'm reading in NLT. It says, This is all the more urgent. This is all the more urgent, for you know how late it is. Time is running out. Wake up, for our salvation is nearer than when we had first believed. The night is almost gone. The day of salvation will soon be here. So remove your dark deeds like dirty clothes and put on the shining armor of right living. Because we belong in the day, we must live decent lives for all to see. Don't participate in the darkness of wild parties and drunkenness or sexual promiscuity and immoral living or quarreling and jealousy. Instead, clothe yourself with the presence of the Lord Yahweh Shah HaMashiach, and don't let yourself think about ways to indulge your evil desires. Put off the weak nature of man and put on the righteous, immortal clothing of the fruits of the spirit of Yahweh Shem Yahweh Shai, man. That's the time that we in, man. And so I really didn't have anything else, bro. Did you?
Yeah, it's just it's one thing I do notice is interesting is you mentioned that the problem that a lot of these banks are having is liquidity, right? And it's very interesting that these new cross-border rails that utilize blockchain, one of the solutions that system brings is the removal of what's known as nostro-vostro accounts. So what that means is a lot of banks, they have capital tied up around the world, which they use for cross-border payments. Right. So this liquidity issue or liquidity crisis could actually incentivize these banks to faster incorporate these new cryptocurrency cross-border payment systems so they could access that liquidity. I do remember Brad Garland, I was talking about it, how a lot of these smaller countries are more inclined to switch over to these new systems because they have the most to gain, because they have a liquidity crisis. They need the cash, and having millions locked up in Nostro Vostro accounts around the world, if you use the new cryptocurrency blockchain systems, you don't have to do that, because you can just transfer money without having the capital on the other side, if you know what I mean. So that could also be a play where you start seeing more of this new innovation be put online over the next 2-3 months, leading in up to a full switch over towards the CBDC system. So yeah, that could be a thing, because I see here with the Credit Suisse situation, they're just saying that they need to give them some liquidity. So it seems like this is really a liquidity crisis at the moment. The banks need liquidity.
And yeah, because people want to withdraw, they're moving their funds, and it's also created too.
Yeah. So yeah, we'll see, man. But it's all leading towards the M.O.T.B, and I hope that the Arkham and everyone else can see that yeah, this is definitely going forward towards everything that we've spoken about. The end goal is to have everybody chipped on a new monetary system, which is real time with all your information attached to you.
Mm-hmm. That's what they want, man. They want to go to a hyper digital system where everything and everybody's integrated into it. And that's going to require you to have a mark implanted into you, which we read about in Revelation, the 13th chapter. We're highlighting some of the things that are being done to lead you into that process, lead you into that system. And it's happening in real time in your face. So,
you know what, Art? You know what? Let me read a little bit of this article here as well. Salakia.
No, bro. Hey.
Before we get over here, because I just thought, you know what, that actually makes sense what this guy was saying. Let me pull this up real quick. Where is it? This,
y'all remember that this brother is not in America right now. He's overseas, so he's up for the sake of the ministry, and I appreciate that. You joining me here, okay? Because I know it's late where you at.
Yeah, it's all good, brother. You know what we do. Right. So, can you see my screen?
Yes, I got you.
Right. So this guy here wrote this for his article, and we know in propaganda, whether private or public, the US needs a digital dollar, right? And one of the things he mentioned here, if we read it, it says you can have stable, non-dodgy banks if you want them. So what they're going to start doing is they're going to start painting the role of the commercial bank as being toxic. You know, all the financial instruments and everything that the bank does. Listen, we just want to put our money in the bank and have it be safe. We don't want the bank doing investing and handing out loans and buying bonds. Just have the money there. Basically, a wallet. Just bear with me. Since you can have stable, non-dodgy banks if you want them, they are called narrow banks or payment banks. They are banks that hold customer deposits but do not take those deposits and lend them to startups or gamble them on a foreign exchange transactions or bet on horses with them or whatever else is that bank risk officers will allow. They will just hold your money, and instead of paying you interest on it, you pay them fees for doing useful things. So this is a whole new system now.
So I'm paying you for a service of holding my money.
Yep. It says now that may sound rather unappealing, but the truth is that a great many people do not need all the facilities of a commercial bank account. They need a cheaper, right? Especially with the cost of living, right? They need a cheaper, quicker, and more transparent options for paying and getting paid. What does that mean? Buying and selling, transactions. An account that is purely for transactions. Yeah. Wallets, for example, can send digital dollars to other wallets over the internet, not going anywhere near the banks or banking networks. All right. So ultimately, what they're talking about here is a new form of banking, a new system. And this is what they were talking about when they first developed the idea. Well, let me not say it like that. When they were pushing out the propaganda of the CBDC, the debate they were having in the public eye was you got what's it called? Wholesale CBDCs, which would only be used between inter-central bank. So these would only be used to transfer money between central banks. And then you had the retail CBDC. But the issue they're saying is that if the central bank is issuing retail CBDCs for the people, then what the hell do you need commercial banks for? And so they were coming up with a thing which was saying, listen, okay, you can still have your commercial banks. There'll be like a second tier, and they would manage the admin for the individual, but it still goes back to the central bank. So they will issue you your wallet. If you're banking with Barclays, they will issue you your wallet, but it still goes back. The API goes back to the central bank. And that's basically where they're heading.
God.
All right, so this is problem, reaction, solution. What's the problem? The banks are doing too much.
Mm-hmm.
So the solution is make it simple. The banks only hold digital assets which you use to buy and sell. You won't be able to save anymore, right? That's why it says you will own nothing. You won't have a savings account. You won't have a pension. They just keep it nice and simple. You got money in there, and the money you use to go to get your fuel, your food, your clothing.
That's all you need.
You don't need to earn interest. What do you need to earn interest for? What do you need a loan for? You don't own anything anyway.
Mm-hmm.
And this is where the system is ultimately going, and most people can't grasp that because they're so used to the system as it is that they completely want to get rid of all this stuff.
Yep.
Savings accounts, what do you need that for? Pensions, and this is all these financial instruments are all connected, and they're all going to disappear. It's funny because at work all everyone talks about is the pensions. I could tell you right now that the pensions are finished.
Yes.
There is no pension money. So you can forget about your 401k. That's not happening.
You're an idiot.
Okay?
Yeah, it's over.
So yeah, I just wanted to touch on that. You can go read the whole of this article, and he makes quite a good argument, obviously, because he's a propagandist. But this is basically where it's all heading. That the banks are going to have to transform themselves into literally just admin for your mark of the beast, for your chip.
Mm-hmm. Mm-hmm.
Simple as that. You turn up, and they just manage that. They already got your name and everything, so that's how it's going to be. So check this article out, man. He actually when you see articles like this pop up, you got to take notice, because this is put out there on purpose.
Like I always say, when Esau start really talking, listen to what he's saying. He gonna tell you what's up. Esau is at a point where he gonna tell you what it is. Like when you go back and listen to the serpent in the garden, he wasn't lying. He was telling you. But you have to be spiritual to discern what he was saying. Okay, Esau gonna tell you what's up. He's now ready to forward his agenda, full course, and all of the people that he don't believe that's down with it, he's just gonna get rid of them. He's gonna kill them, destroy them. Okay.
Yep.
The Most High's got the okay.
Yeah, so I just wanted to touch on that.
Kind. Well, Lord, if you did not get to see this full lesson, if you've been watching the issues that's been going on with the banking industry and you don't really understand why this and why that, as far as interest rates, bonds, what is it, the CBDC'S, what does that got to do with what's going down? Go back to the beginning of this video where we break down from the smaller parts and lead you up to how this fractional reserve banking, interest rates, bonds go into what's happening right now with this controlled demolition. Now, how does that lead into prophecy? How is it relevant to the M.O.T.B systems? Go back and watch this video and take your time. All right. And that's the whole purpose of these GMS algorithm videos. We always pray that this was edifying. Did you have any other closing statements, bro?
No, that was it.
All right, man. Well, with that, man, we're just gonna say once again, call hello, Yahweh, Bahashim, Yahweh Shai, Bahashim, Rakah, Quadash. Want to send double honors to the apostles and elders of Great Millstone. Much peace, love, and salutations to you brothers and sisters that's jumped on, that's pushing the glory of Yahweh, Bahashim, Yahweh Shai, in sincerity and in truth, man. And keep your head up. Listen to the watchmen. Stay prayed up. And hey, whenever the apostle announced what the hopeful year that all the prophecies come to pass, since the time of the Passover, we see that things are accelerating as usual. And amen, make sure you throw up those prayers. Throw up those prayers for the Most High to hasten the time of the coming of Yahweh Shai and the downfall of this wicked kingdom. Put it out there, man. Put it out there, man. Say it. Say it out loud. Don't just think it. So, man, love all you brothers, man, and shalom.
Shalom.